Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, October 5th, 2020. It's really nice. If you were watching the news just recently, you saw the president getting on the helicopter, headed back to the White House. Great sign, and we wish him the very best. The market wished him the best, too. As soon as the market heard that the president was doing immensely better, the markets took off and they're up again tonight. Now, you got to remember something. A big Monday, according to Stock Traders Almanac, often results in the market giving back some of that on Tuesday. So be careful with what you've got right here. We saw the dollar take a beating. Metal markets were up sharply. They've given back a little bit tonight, but this is a big rally that they had. Copper still holding here in the 296 area. The energy markets, they joined the whole rally today, up sharply. They're getting some bullish news with supply coming off the market. Norway's got a strike at a number of its offshore platforms, and they're a huge producer out of Europe. When you look at the bonds and notes, interest rates have been going up. We're 0.73, 0.74 now on the 10-year note. That's a lot different than being down just recently to the 0.51 level. So that is an interesting number. How that flies with the Fed, I don't know. We're going to get the FOMC minutes, by the way, this week, so be ready for those. When we take a look at the S&P 500 index, the one thing that stands out to me, and I'll come right here, is that the market finished this week at 3339.25. This was the last break highs. That was your bounce, 33.53.60. Then we break down, we come back, we didn't get over it, we got over it today. But this is a weekly area chart of closes. Weekly is the key word. If you close like that, then I'm going to say this correction ran its course. If you pull back, obviously it hasn't. So the first day is pretty good, and I understand once you got over that number, the traction the market got, because it was like an all clear signal to some traders. When we come to a bar chart, I look at the chart action here. You know, you've got the makings, and let me just tell you chart formation of a head, a shoulder, and another shoulder. Should this market get over this area here, let's call that the 3,400 area on a closing basis, I think you'll hear more about that formation from other traders. So I want to be the first to say, hi, this could be inverted. And what happens with inverted is you literally grab it and you flip it over on your chart. So this market's going from roughly 30, let's call it 3,400, just for the sake of discussion, all right? And this high would be the peak of that shoulder right through there. Let's call that 34.25. 34.25 to 3,200. You flip it over. When you do that, you're going to get a number of about 3650 as the objective as to how an inverted head and shoulder is measured. I'm just giving you the approximates, but that would be it. Be interesting to see if it happens. I wanted to be the first on the block to tell you about that. When we come and we put on the swing line, that all gets not seen. But you do have a pattern of higher lows, higher highs. That, I think, is very important. Where are we? The market is held on the pullbacks, the 18-day average, my line in the sand. I have said this market's turned bullish. You've heard me be saying it, and certainly my subscribers know it. So now the question is, where's the resistance? Well, you go looking in this case, not for the moving averages as they're all under the market. You look for the Bollinger Band in this case. And in the Bollinger Band, it's 34.31.57. So that becomes the next target to the upside. Support's back at 33.33.25. Let's round up and just give it there. And the number you don't want to take out if you're going to keep the bull trend going here is 3,300.25. That would be it. So we'll see what happens. I'm going to repeat again, a big up on a Monday. Often it results in some selling on a Tuesday, and you were up big. You were up 53 points, 1.61% today. When we take a look at the momentum, you're overbought. So between looking at the Bollinger Band, a big up Monday leading to a Tuesday, I have a lot of caution that you have to think about. I am. In the NASDAQ, the trend has been up. Higher lows, higher high. You would hit the upper Bollinger Band. You fell all the way back towards that 18-day average. You're holding it and you're overbought. This market, since it's already hit that number, it could be a resistance again, but you're overbought. Again, there's a theme. This rally is overbought, and it is not, N-O-T, not trying to embed. So it's not a market that's ready to convert from overbought to locking in. Dow is the same thing. You've had your higher lows, 3 of them, higher highs, objective 28,325, support back at 27,505, and the number you don't want to take out is 27,109. That would break the uptrend but not start a new downtrend. The powerhouse has been the Russell, and I think we were talking about that. This is the surprise market, but in all fairness, I said to everybody, I said, I think you attracted the big boys. I think the long-term trader that just says, I believe the market's going to be higher by the end of the year. I want to own something going into the election, bought the combination of the 200-day and the 100-day as it got down here. He's now got a heck of a lead. He's got himself 150 points in this market plus, or just about there. And I do think that the smart guys that bought that might have cut back their position as you hit the upper Bollinger Band. Why? When you hit a Bollinger Band, 5% of the time you stay over it. A lot of the different systems pay attention to that. A lot of the longer term trader boys look at that as well, and they'll say, okay, I came in right, and it's going from the lower band to the upper band. It could go higher. It needs a reason, and it's overbought. I don't know what that reason is. When we step into the VIX, and this will come up right about now. Come on, there you go. The market today fought 2 times at the upper Bollinger Band and thrown back. The trend is still up. You have higher lows, higher highs. I think the big money took money off the table up here. The divergence to me is, why has this market been holding up? Well, the stock market's up. I'm confused with it, okay? That is a surprise in the market. I guess what you're really saying is, as the market's going higher, the fear index, if you will, people are doing what? They're bidding this thing up right now. They want to own it. They're fearful of what's going to happen. Very surprising, isn't it? But that's what they're saying. As we step over to the T-bond market, well, you broke out of this sideways action. Not here, not on Friday. It was today with a vengeance. Bang. I thought the market would hold better. It did 3 times. I think you'd agree with me. But now it just let go. I don't know what's next in it, but this market has just caught all these people. Nobody in this area that is long has a profit. So it's caught a whole group. This is a trade I'm sure you're going to read about in different trade journals, the Journal, different papers, Barron's, and so on. The trade the traders got wrong. Because what you thought was that these interest rates would stay down as the Fed has the markets back. Instead, the market is challenging the Fed. That is the way to look at it. You're driving interest rates higher across the spectrum. Even the 10-year did it. The 5-year did it, my friends. Then we get to the dollar with higher rates. Why is the dollar dropping? But that's what's going on. Because the risk mentalities come back in a large degree. And that risk mentality is bidding up other currencies against the dollar and dropping the yen. So you've got lower highs, lower lows. The trend is down. The bias is down. Momentum is down. In my opinion, until the market takes out 94.09, the bears have good control, and the support first comes in around the 93.30 level from what I've calculated, then down to the 92.65 level, but 94.09 is going to be the key in the market. We talk about this regularly in the reports that we write. We cover so much of the marketplace. For those of you that haven't seen what we write, or if you have our charting software and listened to the commentaries throughout the day, you get an education. You get a lot of fundamental information. You get spread information, option trade combinations, what they're doing, what the pros are doing in the market, because we have people that are watching it all day long and they're writing about it. So if you're a commodity trader and want to get commodity information written for the commodity people, you should pay attention to what we do. How do you get a free sample of it? The word is free. It's simple. Just go to our website, www.iraepstein.com. We'll give you a 2-week trial free. Sign up on the bottom right. It's that simple. You see if you like it. If you do, then we'll talk about how you can get it from us. We don't want a credit card. We don't want anything at this point. Give it a try. I'm Ira. You have a great day, and I'll see you tomorrow.